Hello, my name is Tim Cooney of Cooney & Associates, Inc., doing business as 1031 Real Estate Exchange Specialist. Thank you for taking time to watch this short video. Our intention over the next few minutes is either to re-educate or introduce 1031 Real Estate Exchanges to you and your team and how it benefits you and your client. I have been a 1031 Real Estate Exchange Specialist for over 25 years. I'm currently managing broker for Exit Realty Home and Ranch in Durango, Colorado, and have been a realtor for over 40 years and an accountant for over 50. My business partner, Gina Warner, and I have traveled and continue to travel nationwide to educate other real estate professionals about 1031 tax-deferred real estate exchanges, and our experience and expertise provide our clients with unique perspectives and advantages when it comes to selling profitably and investing wisely. Now a short history of 1031 exchanges, starting with the definition. Per Section 1031 of the IRS Code states, no gain or loss shall be recognized on an exchange of property held for productive use in a trade or business or for investment if such property is exchanged solely for property of like kind which is to be held either for productive use in a trade or business or for investment. The tax is deferred. The property must be an investment, income, or business property. The first code section allowing 1031 like-kind exchanges was added to the IRS Code in 1921. These were true exchanges between people at the same time and table, exchanging actual properties between themselves. In the late 50s, the Starker family from Oregon sold several pieces of land to a company, Crown Zellerback, that then, over 5 years, purchased land at the direction of the Starker family and deeded the property to the Starkers. After 3 court cases, the U.S. Ninth Circuit ruled in favor of the Starker family, which created the rules for deferred exchanges. The IRS was given the task of coming up with the rules such as 45-day identification and 180-day closing. There are many benefits for both the realtor and the client. For the realtor participates in at least 2 transactions, the sale of the relinquished property and the buy of the replacement property, even if it is only a referral fee earned on one or the other. For the client, no taxes are currently due if you purchase a property that is equal to or greater than the net sales price of the property sold and use all the funds from closing to purchase a replacement property. Also, deferred taxes can be eliminated upon the death of a client. The heirs would get a stepped-up basis under current law, and all taxes that have been deferred go away. When and why to do an exchange. First is to increase cash flow. By moving from one property to another, a person can create or increase monthly cash flow greater than they currently receive. Also, job and living relocation creates the ability for the taxpayer that wants to be closer to their property. The second is leveraging up. By doing an exchange and deferring taxes, the taxpayer can use all the funds from the sale of the relinquished property to acquire larger or more properties with better cash flow. There are various types of exchanges. The forward exchange is your more typical and most common exchange. You sell your relinquished property and buy your replacement property. The taxpayer can add properties to either the sell side or the buy side in the same exchange. Next is the reverse. That is when you want to or need to buy the replacement property before you have sold relinquished property. Construction exchanges is when you want to buy a piece of land and want to build a structure on it. You can also combine reverse and construction exchanges, handled like a reverse exchange, but you are purchasing raw land. Lastly is the improvement exchange, similar to the construction exchange, but the replacement property needs only improvements. Now let's talk about some examples of how to work with your client. If you have a client looking for income or investment properties, ask the client, have you thought about a 1031 exchange? If interested, give us a call. As a qualified intermediary, we will be happy to be a resource to you. By law, you are required to use the services of an independent third party called a qualified intermediary or QI. I don't and can't compete with you as a realtor. We are a collaborator, a consultant, and always still recommend consulting your legal and tax experts. Definitions of like kind are very broad. For example, commercial residential raw land purchases are the most common like kind properties. Others that many don't think of are timber rights, unharvested crops, oil, gas, and mineral interests. Leasehold improvements over 30 years are also considered like kind. An IRS ruling has also allowed second home and vacation homes with rental capability possible if part of the reason for purchasing them is for investment, even though you have a personal enjoyment planned for the property. One thing to note, as of 2018 IRS ruling, they did away with personal property exchanges. In closing, as the 1031 real estate exchange specialist, we are a monumental resource for you and your client. We want to state, with all our years of experience in Colorado and throughout the nation, we have brought and will continue to bring unmatched value to our clients, old and new, because of our experience, work ethics, and availability. We are always on the job and respond quickly to every call, text, email, or Facebook message. As your 1031 real estate exchange specialist, we are committed to building a long-term relationship with our clients, listening to their needs, and offering the same guidance we would to family and friends. Our guidance and QI consulting give you and your clients an edge on making wise and timely decisions regarding commercial and development acquisitions. Please contact us with any additional questions. Thank you.